Hi everybody, I'm Mike Gasior, and this is my May 2006 video commentary. And as I promised last month, I was going to try to keep these locations a little bit more exotic than typical, and pretty appropriate for this month since I'm moving into a more mysterious product, credit default swaps. I thought this would be the perfect scene. Some of you may recognize this, some of you may not, but those of you that are fans of the Da Vinci Code will recognize it immediately. Because credit default swaps, just to sort of break the ice here, is I came up with a class, probably in 1991, my derivative seminar, 2 days. One of my big brokerage clients immediately signed me up to come down and teach it to their operations and accounting people. And what was interesting was the person that was bringing me down to do that seminar asked me, Mike, would you do me a favor, spend at least a few minutes talking about credit default products? Which I'm like, sure, I'd be happy to do that. I'd never heard of them before. And what's interesting about all that is here's one of the biggest brokers in the world 15 years ago preparing their back office people for this product, which literally, it's only the last couple of years that these products have become mainstream products. The example that I've used for years is this. Let's say right now the Italian government is in quite a bit of debt relative to the size of their economy. If you compared Italian government securities to U.S. governments, they probably would pay 200 or 300 basis points more interest for the added credit risk. But what about this? You've examined the Italian situation and you've thought about investing some of your money because you think Italy's going to be fine. Well, how about this? If you buy the Italian bonds, you're going to have euros to deal with, settlement issues, custody issues. My idea, I'm a big broker, is I got an idea. Keep your $100 million invested where it's currently invested, in U.S. Treasuries. What we'll do is this. We'll do a swap. And here it is, just like last month's conversation. On $100 million notional value, I'll just pay you 300 basis points. I mean, just pay it to you. And now your $100 million is still in the U.S. government's. So the 300 basis points that I'm paying you is bringing your rate of return up to a level commensurate with the risk of the Italian government. What you're going to pay me, what we're going to swap, is you're going to pay me the default risk on those Italian government securities, which means if Italy ever defaults on those securities or gets downgraded, and we have to write all this down, it's in the agreement, what the event is going to be that's going to cause you to owe me money. So if the event is an actual default and Italy defaults, those bonds decline in value by 40%, that's what you owe me. The 40% decline in market value in those Italian government securities. And which is exactly the risk that you would have taken had you bought the Italian government securities. Had you bought them and they declined 40%, you would have lost 40 million. That's the same 40 million that you're paying me. So if I ever have, and it's a reasonable question to ask, is why would I ever pay for that protection? If I have those Italian government securities and I'm afraid, why don't I just sell them? If I'm a big brokerage firm, how's that going to look if I sell all the Italian government securities I own, if I do a lot of business with the Italian government? So what I'm basically doing in that swap arrangement is paying you to take that risk off my shoulders and onto your shoulders. That's the basic premise of a credit default swap. I'll pay you the difference between a riskless rate, which is treasuries, and whatever the risk I'm asking you to take onto your shoulders. I'm paying you to take that risk. I hope you enjoyed this scene. I've been here every day for the last 2 days. I love it here. And as I was last month, I got to go get a glass of wine, man. This is good stuff. I hope you're all well. Next month, most likely won't be in Paris, but I'll try to find someplace interesting to do this video with you from. And we're going to move on to another, more complicated topic still. I hope you're all well. I'll see you soon.